I think, Bill, this is probably the best long-term story out there right now in the publicly traded markets. This is a company that's basically dominating its marketplace. It's laying competitors to waste. We saw recently what it's done with the Sports Authority, Radio Shack. Up next is probably JCPenney's, Sears, and those companies. This is a company, as a long-term investor, I believe that everybody has to own right now.
Jack, you feel differently?
Yeah, I feel differently, and I mean, maybe at one point in time, when the stock was not up, 130% in the last 13 months, it might have been a more reasonable argument. But I think if you look at this and the CEO himself, Bezos, said on the last call that we're going to swing 10 times and maybe we'll hit it once and that's all we need. So I don't think a 10-bagger is really appropriate, but you have to look at it. And they've gotten away for 20 years without being profitable, and now they're profitable. And their profitability, I think their operating margins are around 4%. That's less than half of the industry average. So,
but to the one analyst who made this call at the Sohn conference, Jack, if you're investing long term, 5 years, even 10 years down the road, does it matter that it's been up that much in the last 12 months?
Absolutely, because I think that you're going to reach a point where the costs are not, or the revenue is, the costs are going to pick up with the revenue. And I really think that people are, first of all, overstating their cloud ability. I think that you've seen already that Apple has taken their platform away and gone towards Google. You've seen that Spotify has gone off the Amazon platform. You see that Microsoft is taking a lot of, and also I think you've had 4 or 5 other deals where they've migrated away from Amazon Web Services and towards the more kind of cost-effective options. So, yeah. And then on the retail side, retail is not a great investment. And I do think that it's not reached a maturity point, but the type of value that people are ascribing, you're assuming a 25-30% run rate at high margins, and they've not.
I was just going to say, Robert, we have seen such a halo effect around the stock and around Jeff Bezos lately. We know what happened in the past when Apple was the darling, and are you confident that sentiment can keep improving here, at least for now, and then long term that they can keep executing to meet these high expectations?
Yeah, I believe so, Kelly. I mean, because Amazon is a company, you got to remember, that's still growing active users by over 20%, and they're really just starting to gain traction now internationally. This company is growing 33% on a compounded annual rate. If you look at their third-party division, that's growing at over 43% right now. And like I said, I mean, eliminating competition is not inexpensive. And I think the idea that, this is a company that's not profitable, that's really expensive, is really a specious argument. It's a company that does have 4% margins right now, but they're not going to continue to spend like they're spending forever. And when the competition's gone, you see a raise in price. They're still gaining traction with AWS. I think there's a long way to go on this stock. I wouldn't be surprised in the next 2 years if you see a $1,000 price tag on the stock.